You want to start investing, but the math, the risk, the steps, it's all confusing. Let me simplify it for you. Here's a beginner-friendly framework that'll help you find a property that's right for you in Minnesota. Between me and Josh, we own over 30 investment properties. We've done flips. I've flipped a trailer before. That is a thing. We've done hard money loans, contract for deeds, multi-units, single units, and developments. We've been through it. We understand it. We're going to teach you. The number one mistake I see beginner investors make is not understanding actually how much cash they'll need or being financially ready to start this. Here's a little bit of a breakdown of what you're most likely going to have to be able to get pre-approved to make this happen.
Generally, when an investor's looking, most lenders are going to want somewhere around that 20 to 25% down. So if you're looking starting at the low end, $300,000 property, you're going to need $60K in your bank account. Well, there's a couple of different ways to do that. We've talked about that in other videos. Quick scenario would be a home equity line of credit. You have the money saved up, or go find an investor to help you with that program.
The one way to get out of needing that 20% down, the reason why it's 15 to 25% is because you're not owner occupied on that property. With government loans is where all your loans are going to be to get the best rate, is those are going to need to be owner occupied. If you're not owner occupying that loan or that home, then you're most likely going to have at least 20% down. Now, at $300,000 is just a rough estimate of probably a good property to purchase. Yes, I get it. You can find some that are $100,000, but now let's consider this. A $100,000 property is going to have a lot of capital expenditures, most likely, that you're also going to have. So let's say it is $100,000. You probably got $50,000 in updates. You're probably going to need to do that property in the state of Minnesota to get it to where it's rent ready. So understand how much cash you will be able to need is priority number one. Here are the three main routes you can go when it comes to beginning to invest into real estate. Number one is the Airbnb, short-term rental properties. Number two is a flip. And number three, which is personally our favorite, and we'll tell you why, is long-term hold rental properties. So I'm sure you've heard a ton about short-term rentals. Airbnb, they blew up a ton during the pandemic. Everybody wanted to buy one. Everybody wanted to rent one out. Now, here is my honest opinion when it comes to short-term rentals. This is a bit of a dying sector. It was a fad. It's kind of moving away from that. I do think when it comes to a short-term rental, there is the opportunity for higher cash flow if you are in a great location and you have a good setup. Lean toward creating something that's very unique that people want to go to. Those properties will tend to give you a better cash flow. So take an A-frame that costs you $200,000 to build and that can rent out at a high amount, but it's a unique experience. Those are the ones that work. But do understand, especially when it comes to your first investor property, Airbnbs and short-term rentals have a ton of turnover. So the ton of turnover means you have a ton of potential problems. That is the hardest part of investing, is when you do have a turnover of a new tenant, new things, new expectations come up. So there's a lot of hands-on work that has to be done with a short-term rental.
Another common one people like to jump into is the fix and flip, which can be sometimes the most risky because they don't understand the whole package or process. You got to work the numbers backwards when you're doing a fix and flip. Find the property. What's this thing worth in the end? And what's it going to cost for me to get there? And some of the things people don't understand is we have the holding cost in there. That is going to chew you up in a very short period of time, or you have unreliable contractor, or hey, I'm going to try to do this myself over a period of time. And again, those fees will start to add up. But knowing and understanding what am I worth at the end and what is it going to take? When I generally am looking at a fix and flip, I'm looking for a 10% profit. If I have $300,000 into it, I'm expecting to walk away with $30,000 in profit in the end.
The most important that you got it right on spot is knowing your after repair value, ARV, if you ever look into it, is what you're really looking for. And then you have to know, what are my costs going to be to get there? Now, when it comes to a fix and flip, I don't love that approach. It is one of those things that maybe you can do one or two a year. You're getting 10% on a $300,000, like maybe you get $30,000, but that is sometimes condensed into smaller because you have some expenses that do come up, or it doesn't sell what you think it is. And if you've never done it before, it's really hard to estimate what all those expenses are. The other part is this market is not great for flips. There's not a ton of distressed properties. That part of the market is really eaten up by first-time home buyers, and you have to compete with them to be able to get these properties. Is not necessarily something I recommend. Now, here's a little bit of one that I do recommend. This is also our favorite, but let's take this into one of the best things you can do is finding a property that is a little bit distressed. Let's say you are handy, you can do updates, that you want to flip this property, but then when you're done flipping that property, you just rent it. Right. So that that 10% that you had in profit, that will stay until you sell it, most likely, given that the market goes up. And then you can rent it and get cash flow on it. And then that equity that you created in that property will just grow and grow and grow. And this is exactly why long-term rentals are the most efficient and effective ways to do it to gain long-term cash flow and long-term wealth. They are the most boring one. They're the least sexy.
Least hands off a lot of the time. You're not taking care of them all the time. It's like a short term, as you said. People are constantly flipping over. You're there getting the house prepped for the next person. With a short term fix and flip is you're there for 30, 60, 90 days, whatever it takes. You're probably there daily working on that thing to get it ready.
I would say, let me ask you this question. After doing as many investments as you have, are your long-term rentals your best ones you've ever bought?
Yeah, 100%. Yeah, I have 14 of them, and rents have all been great. Rents continue to rise, and my equity just continues to grow as I pay down the mortgage.
And they're less headaches than a flip or a short-term rental or a land development, which we've done as well.
Yep.
Like, it's just one of those things. But the reason why people don't do it is this, is like, what happens when you do a long-term rental is typically your cash flow might only be a couple $100 a month. It literally is that.
Right.
It's
Very
not
minimal.
a lot, right? When it goes, hey, why am I taking $60,000 to gain $200 a month? And it's like, because that's not the point of it right now. And this is the piece that everybody misses out on. If you have a rental property, if you gave me a rental property and go, hey, Brian, here's the numbers, it's going to cash flow $0, but I guarantee for 10 years, you'll never have to change out the tenant or you'll never have to update the property, I will still take it. And here's why. That equity in that property is most likely going to go up. Average over the last 100 years is 2 to 3%. So let's take 2 to 3% over 10 years on a $300,000 house. I wish I could do that math in my head. I don't know what that is. Then also take the fact that your principal is being paid down during those 10 years as well. So if you go, hey, I'm not going to make profit on this for 10 years, but then 10 years later, rents go up as well. That's where the best part of long-term rents come in, is every single one that I've bought has never been, oh my gosh, this looks amazing. I am going to quit my job with this property.
You're not cash flowing great out the gates, but now all of a sudden, over 10 years, your value has gained, rents have increased. Now you are cash flowing $3, $4, $5, $1,000 a month on that property that I started out at zero. Now 3 years later, 4 years later, I went 300. Now I'm at 500 to 600. Now I'm at 1,000. Now all of a sudden I have this equity gain in the property, and also the tax deductions you can get going that route, the write-offs you can get with a rental property.
It's huge. And I'll give you a story on this of how this works, or maybe the easiest way, this is by far actually the easiest way to get into real estate investing, is take the house you are currently in and you turn that house into a rental property and you buy a new house. So my first house that I ever bought, it was a townhome, 1,600 square feet. I bought it on a foreclosure for $160,000. I went, hey, I want to get into real estate investing. I moved to a different house, turned that property into a rental property. At the time, that house was worth maybe $190,000. So I could have sold it, probably made like $15,000 on it. That rent at that time, I think my mortgage was $1,300 at that time. And then
Rent was 15?
Rent was, no, it was $1,800.
18.
So I had about $300 of profit in that. But now here's the thing, fast forward, that was 5 years ago. So in that time period, I was able to refinance that loan. So I went from 4.5% to 3%. So that reduced my payment from $1,200 to $900. So now $900, $1,800. This is now $900 a month in profit. Now rents were at $1,800. Rents have gone up. They have gone up from $1,800 to now I think I have it at $2,250. Now it sounds great. At the beginning, didn't seem like a slam dunk, but now it's like I would take that every single day and twice on Sunday. But the other piece that I haven't seen yet is this: is if had I sold it then, right, it was worth $200. It's now worth $275,000. So when I do go to sell it, in actuality, had I not made any cash flow on the property, it still would have earned me $75,000. And that's the most important thing that people forget or miss out on, especially if you flip a house and you turn it into a rental property. That equity isn't going away. Your hard work isn't going away. It's the problem of this. It's just like this delayed gratification.
Got to have patience.
You have to be patient. It's not going to look like it works out really well. And in the long run, it will. So those are the three best options, with also, hey, that's the one I recommend for people to do. It's the easiest one. You know the property in and out. You trust the property more than you'll ever trust putting $60,000 into a random property that you do an inspection on and earn $100 $100 to $200 a month. That is wildly difficult for somebody to make that leap into, but having it be your own house is one of the best ways to do it. If you found this video helpful to you, do me a favor, click the bell icon, subscribe to this channel, and we'll give you more content just like this.